Hey everyone, here, Andre Rucker here, and welcome back to the Rucker Reserve. So what this video is going to be about today is a video describing what I do in my day-to-day job, which is filing taxes for a large corporation. So I'm making this video today because I know a lot of you out there are going to be recent graduates. I know graduation is coming up soon, so you guys are probably looking into jobs, trying to figure out what you want to do. So I'm going to make this video describing what I do at my job, which is filing corporate taxes. So I'm going to basically describe a little bit what I do, and then I'm going to bring you guys over to the whiteboard, and I'll basically try to write out so I can give you guys a good visual representation of what I do every day. So pretty much taxes are, there's monthly, quarterly, and then semi-annual. So monthly is obviously you have taxes due, every single month. You have to file taxes every single month for certain things. And the company I work for is it's a pretty large company. It has many entities within it. So there's a lot of different tax periods within the month that we have to file for. Most of the taxes I file for are due on the 20th of every month, and then end of month. I have some on the 23rd, some due on the 25th as well. So it just depends on what entity I'm filing for. Also, how our company is structured, each individual person will have their certain returns that they have to do just to try to be more organized and make sure that everyone has a separation of work, and make sure that everyone is doing their part and working, basically make sure the workload is spread out evenly. So as I was saying, with monthly, we have returns due every month, and then there's quarterly returns. Now with the quarterly returns, obviously in the word, they're due every quarter, but a quarter also depends on which state that you're filing for. So for our company, we have 13 accounting periods. So January is, starting at the beginning of the year, January is going to be actually period 13 from the previous year. And then starting in February will be period 1 all the way back again to period 13. And then semi-annually will just be 6 months. You have 6 months, and then a return is due, another 6 months, another return is due. It's just structured like that. So like I said, monthly, quarterly, and semi-annually. And all the returns are filed the same. It just depends on what state, because different states have different tax rates, different things that you can mark off as exemptions. Some states require prepayments, which prepayments are basically you pay a certain amount. Usually for specific states such as Ohio, they require 75% of a prepayment of. So basically what we do is we look at last year's, so say we're filing for period 1. We would look at last year's period 1 amount that we paid in taxes, prepay 75% of that, and then we send that the month before the return is actually due. And we do that because Ohio doesn't, they will not charge us penalty and interest, like if we're late, say we're late or anything, because every state will do that if you're late on filing, or you file incorrectly, or you don't pay the full amount that you should be, they will charge you penalty and interest, and that's just a whole nother hassle that you have to go through. So yeah, like some states require prepayments. That's pretty much it. Like anything out of the ordinary. Some states, their periods are a little different than yours, so you have to do some calculations for that. But mainly the example I'm going to focus on today is why I spoke on Ohio. I'm going to be talking about Ohio and basically what I do for that, because that's one of the states that I take care of when I'm filing taxes. So to begin the tax process for each month, basically we will get an email from our managers saying that certain information for certain entity has been uploaded. And once we get that email, then basically what we will do is we will go in our system, we will get the data, we will look at the return. We will then go on to the state's website, file the return, make sure it matches with the stuff that we have, make sure it matches with our balance sheet, pretty much. And then after that, we will create the wire, and then that will need to be approved by a manager. And then that wire will get sent on whichever day it needs to be paid on. So say if the return is due on the 20th, the wire will initiate on the 19th, and then it will send on the 20th. So that's pretty much what I do month to month. And then even for the quarterlies, like I said, pretty much the same thing, except you only have to do those 4 times a year, and then the semi-annualies, you only have to do those twice a year. So pretty simple process. It's honestly not too complicated. It just sometimes, like with the bigger states such as Ohio, when you start mixing in the prepayments and having to do other calculations, it might get a little, you know, technical, but all in all, it's not really too bad. So let's go on over to the whiteboard, and I'll try to draw everything so that you can guys see it. Yeah, so sorry, I got this little rinky-dink set up here, but I'm gonna try to draw on this whiteboard so that you guys can see what I'm talking about. So basically, I'm gonna start from, you know, receiving the data all the way until submitting the wire to be approved by the manager so that it can be actually sent out to the banks so that the states or the Department of Revenues of each state of whatever you're doing can receive it in their bank accounts. You're gonna receive the data. Now, this data is gonna go into our computer system. Comp is just short for computer, whatever. So once it gets our computer system, our managers will email us and they'll say, hey, such and such is uploaded and ready to start submitting the returns. So once that happens, that's when, draw another line up here, we will go into our program that we use to actually pull the data from. So we pull in the data. After we pull in the data, that's when we will look at our balance sheets and make sure that the data that we have pulled is what we have on our balance sheets. It will make sure you know, it balances, somewhat balances. Sometimes it won't balance completely because there will be there's this thing called like bad debt. So basically, like, it'll be off like maybe not even $10 most of the time. Sometimes there's some, like I said, the bigger state, they will have, you know, huge huge bad debt. So, but other than that, it won't be too off. So after you pull in the data and you match it with the balance sheet, you will then go on to the state's website and you will file the return. After you do that, you will then submit the return, and then you will go on to like our company's site where we will create the wire, and then we will have the manager's approval. So draw another arrow up here, create wire form. After we create the wire form, we will then go to our calendar, which basically has each individual person who works at our company will have a calendar, and on that set calendar, it will actually show which returns you have, their due dates, and like when you need, obviously the due date, when you need to submit it by. So we will go on our calendar and we will mark it off the calendar with when we submitted the return, when we submitted the wire, and how much we're having to pay. So now basically what I'm gonna do is I'm going to explain to you guys how it actually is gonna look online when you go to file the return on whichever Department of Revenue website that you are gonna be, like for whatever state you're gonna be filing for, basically. Give you a little breakdown of like what it's gonna look like. It's gonna start out with the gross sales. See if you guys can see that. Yeah, you guys can see that a little bit. Sorry, the lighting's really bad in here, but yeah. But anyways, so you're gonna start off with the gross sales. And I'm gonna do the state of Ohio still. So basically for our company, our gross sales each month is around 300 million. So that's first. The next thing that you typically will have is you will have exemptions, or so basically you have exemptions. And those are basically just stuff that you won't have to get taxed on. Like whatever entity you're for, like those are basically, it's like a tax break basically. So you will not be taxed on those items. So and usually we'll have around, I'm gonna say approximate about 250 million in tax exemptions. And that's our exemption. Sorry, my handwriting is a little bad. Hope you guys can still read it. But like I said, 300 million is the gross sales, 250 million is the exemptions. So now what you are left with is 50 million, and that is your taxable sales. So now that we have the taxable sales, is when you will take the taxable sales and you will multiply it by the tax rate. And the sales tax rate for the state of Ohio is 5.75%. So take this amount, multiply it by 5.75%, and you are left with, hold on, let me get out the trusty calculator here. You're left with this amount right here. Let's see if you can focus. There we go. That's the amount you're left with once you take out the sales tax. Now, like I was mentioning earlier, Ohio has a prepayment around 75% of the last year's, but then the same period amount. So that'll be typically, I'm gonna say around, let's just make it, to make it easy math, we'll just say it was $875,000. That was our prepayment. So now we would take out the prepayment and we will be left with $2 million. And there you have it. So that $2 million is actually what I will go and submit the wire for. And on the wire form, you actually break down, you know, from the sales taxes on your balance sheet. And you basically do what I wrote out here, but you'll do it on like the tax wire form. And then that's what you submit to the manager to have approved. And I guess I forgot to mention earlier in the video, the tax I work for is sales tax and use tax. Sales tax is obviously basically, like I said before, basically you get taxed on items that you sell in certain states. And a use tax is basically the same as sales tax, but basically when a company buys something and they won't pay tax directly at the purchase, they pay it over the use of the item, and that's paid monthly as well. Well, most states pay it monthly. Like I said, there's some like quarterlies, and usually typically the sales tax will be much greater than the use tax. All right, so there you have it, guys. I hope that video was at least a little informative. I tried basically to teach you guys what I do in my day-to-day basis. To, like I said, for the people that are gonna be recently graduating, or even people that are looking for a job right now, like in accounting, or, and I guess like if you have a finance degree as well, and you're just looking for something to do right after college. Tax department, it's not like I showed you before, it's not really all that complicated. And it's very repetitive, so like you will get assigned something and you will do it every single month. You will get assigned quarterlies and you'll do those every quarter, and same with semi-annually returns as well. So basically you get to learn the routine, get to looking at balance sheets at least a lot, and yeah. So thank you guys for watching. I hope you guys like and subscribe, and say bye, Aria. Say bye. Bye, guys.